everyone, Lee Cantrell here, President and CEO of Redstone Wealth Management. I hope you're doing well. Last week was an eventful week, both economically and geopolitically. Between the Federal Reserve's latest decision on interest rates and escalating tensions in the Middle East, there's a lot to unpack. So let's dive into this week's market update. Quick snapshot, modest moves across the board. We saw a slight dip in major stock indices. The S&P 500 slipped by 0.15%, the NASDAQ 100 was down 0.02%, and the Dow Jones Industrial Average also edged lower by 0.02% as well. Nothing too dramatic, but the underlying headlines had the markets on edge. The Federal Reserve rates were held steady. The Fed kept its benchmark interest rate steady again at 4.25% to 4.5%. They're still projecting 2 quarter-point rate cuts here in 2025, but the road ahead is looking bumpier. Chair Jerome Powell noted that new tariffs could fuel inflation, with early signs already emerging. Businesses are preparing to pass those added costs along to consumers. Here's what else the Fed revised. Growth forecast for 2025 was lowered from 1.7% to 1.4%. The inflation forecast was raised from 2.8% to 3.1%. That said, as long as the labor market remains stable, the Fed plans to hold off on any major moves. Shifting gears to the geopolitical side, Israeli-Iranian conflict continues to escalate. The situation between the two countries escalated dramatically over the past 24 hours with the United States entering the war, a move that has left investors and world leaders on edge. How that impacted things? The oil markets reacted very quickly. Brent crude oil closed at $77 a barrel, up 11% since the conflict started. The real problem? If Tehran blocks oil shipments through the Strait of Hormuz, it could trigger serious global economic shocks. Now, we're going to shift and look at matters closer to home. Housing and consumer insights. The confidence appears to be slipping. Homebuilder sentiment dropped to 32, the lowest since December 2022. Now, a reminder, anything under 50 signals a contraction. Higher mortgage rates, tariffs, and overall uncertainty are keeping home buyers on the sidelines. Retail sales also declined for a second month in a row, down 0.09% in May, and that's slightly worse than what was expected. Overall, though, that was last week. Now looking ahead to what to watch out for in the upcoming weeks. PMI survey data from the United States and Eurozone will offer a window into global business confidence. New inflation information, data from consumer confidence surveys from both the Conference Board and the University of Michigan will arrive. We compare that with U.S. trade data, and that will help highlight the impact on pricing and the rising tariffs. Overall, though, that's what we look for on the horizon, and that wraps up this week's briefing. Now, if anything I've mentioned raises questions, or if you'd like to explore how this or anything impacts your financial strategy, please don't hesitate to reach out. I'm here for you. Until next time.